Hey everybody, this is David Skrika, stock chart of the day. So this is going to be a quick one. So what our chart of the day is going to be is the US dollar and the British pound and the euro. I'm actually heading for Europe tomorrow on Thursday. So sorry there was no update yesterday. I was running around doing a few things. In Europe would be a lot easier because I'll be 6 hours ahead. I'll get up at whatever, 8 in the morning in Spain, and it'll be 2 in the morning. The markets won't be open. I won't have to check trades. You can just kind of do whatever. So we're gonna look at this right now. Oh, 1 second. I got my flight itinerary there. I don't need everybody in the world to see that. So I'm just 1 second. I just want to close some tabs here. And then we're gonna look at first we'll look at up because we won't have the US dollar close yet. Second. Yeah, so here we go. Here we're going to look it up. So this is US dollar ETF, and we're going to look at a 5-year chart. And it looks to me, as you know, I was very bullish on the US dollar last year because we were in that kind of tightening cycle for the Fed. The US initially was tightening much, quicker and heavier than most other central banks, et cetera, et cetera. But then I kind of turned that around this year because I was like, you know what, even though the dollar, because it sold off late last year, is technically up this year, it's kind of been choppy. And I was just like, well, now it actually looks like, with today's inflation report as well, it looks like the dollar is actually going to begin to underperform. And Europe and UK are kind of catching up on the interest rate increases. Like probably this July is going to be the last increase in the United States. And then I think in Europe and UK, you're still going to have a few more. So I think that helps attract, money to their currencies. And remember, there was this doomsday scenario that when the Russia attack happened, obviously, Europe is much more dependent on Russian energy. That hasn't played out. Germany's still kind of in a recession. We're seeing much higher costs in Europe, but, we're not seeing that doomsday scenario of, oh my God, plants are going to shut down. There's going to be blackouts, brownouts, et cetera. Right. So I think we've kind of seen that here. So, play out here in the dollar. So with today's kind of lower inflation report, and it looks like we've only, or lower than, inflation being lower than expected, I should say, it looks like we're kind of going to turn around here. And it looks like to me, like this is a longer term chart. Let's get a chart going back a year. We can see that it looks to me like, yeah, we're kind of rolling over here after this kind of like, the first initial decline, then this kind of rally. And of course, if we break, say, like $27 on the up, that would probably mean that the US dollar is going to be, headed lower. And if we go look at like the euro, the euro broke out today, $1.11. Luckily, I already got all my euros. And I've noticed it too. Obviously, like last year, the euro was about par when I went to Europe, and now it's 10% higher. So we're seeing that the euro kind of breaking out, et cetera, et cetera. I bought my euros a few weeks ago, so I really don't care. And actually, I just sold some pounds. I had some British pounds left over from last year. And if we go look at the British pound, and we remember the panic of the British pound last year when it hit, par, when they had that problem, right here. So again, last year when I went to Europe, UK pound was we were hitting multi-year highs now at almost 130 on the pound. And it just shows you always buy the fear. You always buy the blood in the streets, right? A lot of people didn't think that the pound was anywhere near bottoming. And if you had bought, during that panic, you could be up almost 30% from the low, probably more realistically 25% on the pound. So, and again, I think this has to do again with no doomsday scenario in terms of the energy problems, and then interest rates in these places. Let's see if I can get the UK 10. Yeah, here's a 10-year UK Treasury. You can see actually higher by 60 basis points. UK Treasuries are actually always usually traded at they were trading at a discount for years and years to US interest rates. You can see in 2020, we'll show the US 10-year in a second. US 10-year got on to 50 basis points. The UK Treasury almost got down to zero, and that had been a case for years. Now the UK 10-year bond is trading at a nearly 70 basis point premium. And I think that is helping the currency. So we'll quickly look at the US 10-year bond. And yeah, you can see a 399. And if we go back a few years to COVID, yeah, you can see never got below 50 basis points, where the UK bond almost went to zero. So again, we can see that, we're seeing this kind of now premium in UK bonds. It's probably attracting, some move into the currency. So I'm gonna leave that today. So today that we saw that the US dollar looks like it could be rolling over. Let's go back to the up chart here just to finish off again. And I would say again, if that 27 breaks, 27, 25 breaks, that probably means we're starting another prolonged decline in the US bond, similar to 2020, et cetera, or sorry, the US dollar. And, probably the euro could be headed back to 130, 140, maybe the pound even back to 140, 150. So, but I want to see that kind of breakdown here happen. And as I am in Canada, end off with Canadians. Even the Canadian dollar has trended higher here as of late. I would say you really need to break the 75, 76 area before you can have a prolonged increase. So I'm going to end off on that note. Tomorrow we're going to look at gold and silver. And then on Friday, we're actually going to look at crypto. So everybody take care, and we'll talk later.